Hey everyone, welcome back to the TraderLion channel. My name is Richard, and today we're going to be going over the I in CANSLIM, which stands for institutional sponsorship. And previously in the series, we've covered these topics up here, which are very important parts of the CANSLIM methodology developed by William O'Neill. So if you haven't watched those yet, they'll be linked down below in the description. Getting right into it, what does William O'Neill say about institutional sponsorship? First, he says, diligent investors dig down yet another level. They want to know not only how many institutional sponsors a stock has, but whether that number has steadily increased in recent quarters. And, more importantly, whether the most recent quarter showed a materially larger increase in the number of owners. Number two, he said, in analyzing the recorded quality of a stock's institutional sponsorship, the latest 12 months plus the last 3 years of the investment performance of the mutual fund sponsors are usually most relevant. So we're looking for two things here. We're looking for an increase in fund ownership as well as strong funds owning that particular stock. Moving on, he says, number three, a significantly new position taken by an institutional investor in the most recently reported period is generally more relevant than existing positions that have been held for some time. When a fund establishes a new position, chances are it will continue to add to that position and be less likely to sell it in the near future. And number four, he says, institutional trades also tend to show up on some ticker tapes as transactions of from 1,000 to 100,000 shares or more. Institutional buying and selling can account for up to 70% of the activity in stocks of most leading companies, and this is the sustained force behind most major price moves. Number five, he says, it's possible for a stock to have too much institutional sponsorship. Overowned is a term we coined in 1969 to describe stocks in which institutional sponsorship has become excessive. The danger is that excessive sponsorship might translate into large potential selling if something goes wrong at the company or if a bear market begins. And finally, number six, he said, another benefit to you as an individual investor is that institutional sponsorship provides buying support when you want to sell your investment. If there's no sponsorship and you try to sell your stock in a poor market, you may have problems finding someone to buy it. So those are the main points that O'Neill made in how to make money in stocks. You can have a stock that is too owned. So for instance, the kind of FANG companies at this moment, a lot of funds already own those stocks. And if for some reason fundamentals deteriorate, that could contribute to a lot of selling if something goes wrong. And you want to be on the lookout for institutional sponsorship, because if something is breaking a key support level, it might be support at that level. And if you want to exit at some point, you'll have somebody to sell to, because these large funds are continuing to accumulate that because they've got that longer term time horizon. So moving on, let's talk about the benefits of strong sponsorship. First of all, accumulation by funds create the long-term trends. And that's because after breakout, as with Roku here, funds can't just buy that first week, that first day. They have to steadily accumulate over the course of weeks and months, which creates this trend here that we can then ride as individual investors. Number two, strong sponsorship provides support at logical technical areas. So for instance, here, the 10-week moving average found support or provided support here, here, as well as here. And if a stock pulls back to a base pivot, that will often also be a point of support if the stock has strong sponsorship. And finally, as O'Neill mentioned, strong sponsorship provides liquidity in weak markets. So stocks that are being accumulated aren't going to sell off as hard as stocks that have little to none institutional sponsorship. So moving on, how do you find these high quality funds, and how do you determine which funds are worth paying attention to? Well, as O'Neill said back here, you should analyze the past few years of performance of a particular fund. And of course, if you're trading growth stocks, you want to be focused on growth funds in general. The easy way to do this is just to follow IBD's research. This is a list of their flagship funds. So these are funds that over the past 10 years, 5 years or so, have proved very successful and have had strong performance and like to focus on the same type of CANSLIM type names. So you can just use this list. That's a great way to do it. But if you do want to do your own research and go into the past performance, you can do that as well. And moving on, we've got Net or Cloudflare. And here I'm showing how the number of funds increasing can contribute to a fantastic run like Net had, going from around 20 to just under 100 in a very short amount of time. So here at its IPO, it had 0 funds. Then quickly we had a step up in funds, 145 funds owning it. And then most recently in March 2021, we had 835 funds. So going from 0 to 835 funds is going to have a dramatic impact on the stock's price And this is what you want to look for, an increasing trend in the number of funds. And down here, you've also got the flagship funds that are also owning this stock right here, net. So as well as looking for an increasing trend, I like to see at least one or two of these flagship funds in a growth stock that I'm considering. So in summary, accumulation by funds creates those long-term trends that we want to ride as individual investors. We want to look for increasing fund ownership as well as high quality fund ownership. And finally, true market leaders are created by institutional accumulation. Those super performance periods where a stock goes from 10 to 100 are going to happen because of significant accumulation by a lot of funds who are fighting over the supply of shares. So that is institutional ownership, a key component of CANSLIM. I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.